All right, Ken Orange Theory Trader back with you with another video just talking about candle twos, how to recognize them, and framing the candle range theory. So let's remember that candle two, when we're looking at the three candle range theory pattern, candle two really sets the tone for the reversal. So if you can recognize candle twos in real time, you have such an advantage over traders who don't know what they're looking at when they play out. Now, when you suspect a candle two could be forming, though, that doesn't mean it's always going to be 100%. And so one thing I do to put the odds in my favor is that for me, candle two has to create the high or low of the day. If I'm trading an 8-hour chart, the same rule could apply to a 4-hour chart. So let's take a look at, just for example, Euro New Zealand. All right, so let's take a look at this first day here. And there's only 3 candles that make up a daily chart on the 8-hour chart. So you have the 1700 candle, the 1 a.m. candle, and the 9 a.m. candle. That's it. So if you notice right here for Monday, okay, this past Monday, okay, this candle right here, let's make this a little bigger. This candle right here, this red candle created the low of the day. And it's a bit of an imperfect one, but how I do it is this. I just measure from the bottom of candle, what could be a candle 1, to the close of candle 2. And if it doesn't break it by more than like 10 pips or so, I will frame a reversal off of that. I'll see if I can get some reversal action to the upside. So once I see that, I say, okay, this is like a valid candle 2, so this must be candle 1. So then you just frame your range. So we use our fib retracement tool to do that. And I use my long bias here, or my long template, like that. So now that we have candle 1 and 2, let's go through the replay option here. And we'll just do it like this. Okay, so we have candle 1, candle 2, okay? And as we see, their mark levels very clearly lets us know this is the low of the day. So that meets my criteria for it being a candle 2. So now what you do is you have to know your trading range, which means this. You need to know where you're allowed to trade and where you're not allowed to trade. Now, what I do is I would strongly recommend that you keep your trades in this zone right there. I trade off of fair value gaps in this zone. I'm not trading outside of the range, and I try not to trade above this line if I'm going long. All right, so this is my trading range right here. No trading outside of here because it could be a breakout and just continue down and destroy anybody who tries to go long. Or it could just bounce off this level and then continue down as well. So this is my bread and butter right here. Now this zone is 38 pips. So I trade starting with a 1-to-1 and possibly scale into the position. And out of this 40 pip zone, I can get at least 20 pips. Okay, so that's the mentality behind it. I'm not looking for a 100 pip move here. That would make sense. Okay, you have to go with what you're given. So now when we go down to a 5-minute chart, let's take a look at, and we turn on our fair value gap indicator. I just use fair value gaps. I just use them because to me, it proves there's momentum in the trade. That's it. There's no real deep reason for it. Okay. All right. So now when I hit play, and this would be a 1700 long candle. So we'll just let it play out till it gets, because we already saw that it worked out. So let's see what our best entry would have been here. And as you saw, just because a gap appears doesn't mean it's going to hold. All right. So the best gaps that held were actually right here. And this was at 23:20, which was close to 11 o'clock at night. Okay, but at 20:20 right there, you would have been out in like 10 minutes. So sometimes you may only get one entry. Okay, that can happen. But if you can scale in, by all means, definitely do so. Okay, but this right here would have been a very clear win. I mean, it doesn't get much more simple than that. All right, these are the gaps that held. You can also take the entry when the gap appears. So it would have been right here at about, what is that? Close to, was that 1050? Yeah, right there at 1050. You could have taken it there as well. You would have had a little bit of drawdown, but you had plenty of time to get in. And like I said, just set a 1-to-1. And this one actually would have been a better opportunity to scale in, because you could have added a first entry here. And then another one, say like right in there as it bounces off the range. Okay, that could have been an entry there. So 2, So now when you do that, when you add multiple positions, sometimes what I do is I'll move the stop loss up to keep the loss the same. And then you're shifting from a 1-to-1 to a little bit more than a 1-to-1, like a 1 to 1.7 or so, something like that, or 1 to 1.5, either way. But the take profit always stays the same. I don't move it. If I move anything, it's going to be the stop loss. It's never the take profit, though. Okay, take profit is fixed. Okay, so we're going to get rid of these drawings here. But the point of this is that we need to be able to see candle 2s. Okay, so I'm going to go do a couple of other pairs now, and we're going to frame candle 2s and just frame our range. So let's try pound dollar. And I'm going to show you another type of candle 2 that isn't as easily as, it's still tradable. It's just a little, well, you'll see. I'll show you. All right. Yeah, matter of fact, we need to exit the replay. Yeah, I think it is on pound dollar. Yeah, all right, here we go. Okay, so here we have on Wednesday, candle 1, 1700, and what could be a candle 2 at 1 a.m. There are times where candle 2 will break out or close right at the range high. So you can trade this as a breakout. But remember our rules, okay? Candle 2 has to create the high or low of the day, which it did right here at 1 a.m. So let's do a replay option. Okay, you see there it says low of day, LOD. That's why I like the mark levels indicator. It just automatically labels that stuff for you. So when you know what candle 1 is, when you know what candle 2 is, then it makes it easier to say, okay, well then here's candle 1 right there. Now, here are the rules for this type of candle 2, because it really depends. Your trading zone is set on what candle 2 does and where it closes. Ideally, it closes down here, but there are times where it'll close up here. And you're going to look at this as a breakout of the range. That's what you'd like to see. But the trading zone is going to be, theoretically, it could be this whole zone here. So when candle 2 does this, the smaller the range, the better. Now, this range is 45 pips, okay, which is sizable. Okay, I'm not going to act like it isn't. It is. The smaller the ranges are better, because this can stop you out. So what I would like to do is we can wait until price gets around here. Okay, you can amend it. You don't want to take like the top half of it. You could just, do what fits your trading style. Let me make it smaller here. Okay, do it, but you don't want to, I wouldn't buy this the minute candle 2 closes and then just expect an immediate breakout. I would always look for a pullback, okay? But I want to try to look for a pullback to the middle of the range and then an expansion to the upside. So what we'll do now is we'll go ahead and just let the next candle go. And we see there was a pullback, and then we'll just take a look at the 5-minute chart to see where the best entry would have been. So if we drop down to the 5-minute, bring up our fair value gaps. Man, this would have been at 9 a.m. Okay, so I just got a little template here showing the yellow box, showing where 9 a.m. started. So this is the 9 a.m. open right here, okay? And sometimes with these larger candle 2s, what they'll do is they'll pull back into, I'm sorry, larger candle, the larger candle 2s, when candle 3 starts, it'll pull back into a prior fair value gap that was created in candle 2. Okay, so this fair value gap here was created at around 7:55, 8 o'clock. So then when 9 o'clock opens, it comes up and then it goes down into this gap. So you could have entered right here at 9:35 on a 1-to-1. Okay, again, that's where it starts. But then what you can do at that point when it comes to scaling in, every time a candle closes in your favor, or at least above an entry candle, you can add another position. So you could have had another entry here at 9:45 on a green close. I mean, this one you would have been out in 5 minutes, okay? And then it even gave you another chance up here. Now, I'm not recommending you take these types of trades. Once you break out the range, I mean, play it by ear. Sometimes they work, sometimes they don't. I prefer to trade inside the range though. But this one did work. So if you want to try 1-to-1 there, that hit in 5-10 minutes. But gaps, I use gaps as the primary motivation for entries, is my point. Okay, because the thing is, if I'm looking for candle 3 behavior, One of the main things you're going to see in candle 3 is fair value gaps that get formed and then they hold. So this is a valid candle 3. Look at all that strength and momentum here. The momentum didn't die down until 3 o'clock that afternoon, but it started at 9:35. So from 9 to 3, you had all this that was available for you. Look at that. It gave you plenty of chances to get in. This is just a strong candle 3. Yet another entry possible right here at 12:55. Right here. And another entry possible at 2:45 right here. All 1-to-1, 20 pip stop loss, 20 pip take profit. But you should be able to get at least 1 to 2 trades per candle 3. But can you get more? Yeah, I've seen as many as 5. But does price move like this every single day? No, because I think this was like a 100 pip move. Let me see. Yeah, this went up 155 pips. Okay, but that's not normal. That is an anomaly. Okay, that doesn't happen every day. Okay, but it starts with spotting candle 2. So those are the two main types of candle 2s that you may run into. Let me see if we can find one more. But again, it just depends on where it closes. Sometimes it'll close near the range top. Sometimes it'll close near the range bottom. So let's see if we can find one more. Let's go to, let's see if Aussie Swiss had any. No. New Zealand CAD. No, I know what I want to do. Yeah, let's do New Zealand. Okay, and I actually did a video about this on Friday, but same deal. Matter of fact, I do Aussie because I actually took this trade. Okay, so you have candle 2, which creates the high of the day. This is a 1700. This was Thursday, 1700. High of the day created at 1 and then 9 right here. Okay, but again, it all starts with spotting candle 2. And here's another one right here. 1700 creates the high of the day. Once you spot candle 2, you frame candle 1. And candle 1 is what gives you your trading range, just like that. That's it. Just keep it simple. Okay, your trade, you're golden right there. There's your candle 3 right here. And another one right here. Okay, and anywhere above these lines, you're good to go. So let's take a look real quick and see how many trading opportunities this candle 3 gave us. We drop down to the 5-minute. Turn the gaps on. I think this was at 1. And of course, it's easy to see in hindsight. It's just that you want to be able to practice and get these in real time. So, okay, this was a good trade here at 640. You know, between 625, 640 or so. Could have got one there. And then at least one more opportunity right here around 750. And just let the gaps be your guide. And if the gaps get taken out, then just exit the trade. Okay, but that was 2 good trading opportunities right there on Aussie yen. And then for the Friday one, right here. Okay, if we drop down to the 5-minute, and that was at 9 a.m. Candle 3. This one got on my nerves because it came all the way back. Or actually, no, it was New Zealand, but they did the same thing. It had a heavy retrace, but I should have stayed in because there was a gap here that got filled, but then it tanked after that. But as long as the first gap hold, that gap there was the main key. But it did give you a second chance right here. So right here at about 150 is when another one would have played out. So if I followed it, I think I was taking a nap at that time. But anyway, if I'd have followed it, I would have got in and could have got a decent profit out of it, but I didn't. But anyway, so that right there. So the thing is this. Candle 3s should give you at least 1 to 2 good trading opportunities. You just have to train your mind to understand your trading range. Because see this red line, that's the middle of the range. So as long as I'm getting fair value gaps above the middle of the range, I just take it. Okay, but the thing is, sometimes candle 3 will fake you out because I'm going to just let this play real quick and you'll see. See this right here, this yellow line is where the candle 3 began. Let me get rid of this. But you'll see some of the gaps get filled, and that's why I got out. See that sharp retrace right there? It listed at longs and then tanked short. But then it came all the way back up. See how that gap got filled there? That gap got filled right there. I know it's going fast. And then I'm not sure if this was the one that held or not. Let me see. Okay, and then this one, yeah, this one held. All right, so, sometimes that's why risk management is key. Because just because you see a gap doesn't mean it's going to hold. Okay, but when it does hold, then it's going to be a winner. You should at least get 20 pips out of it, generally speaking. Okay, generally. All right, but again, train your mind to understand where you're taking trades at and keep it as simple as possible. For me, it's just fair value gaps on the top half of the trading range. That's it. That's all I trade. Candle 3 only. No candle 2s and definitely not a candle 1. So I hope that helps. I appreciate your time and attention. Thanks for watching and have a great rest of your day. Take care.